even though China is so advanced from multiple standpoints in terms of smartphones and modern technology, they're actually pretty heavily reliant on physical SIM cards rather than digital SIM cards. So we'll see what happens for that phone in China. The other thing to note is that the new iPhone SE coming this week and the iPhone 17 Air in September are both going to use a non-Qualcomm modem, an Apple in-house modem for the first time. So we'll see performance-wise how that stacks up against the Qualcomm modems that consumers are used to. If all goes to plan, customers will never know the difference.
Carol's speechless because she wants a folding phone.
Well, that's what I was thinking.
She wants a folding phone. What can I say, Mark? She wants a folding iPhone. Is it going to happen?
Is that never going to happen?
I would anticipate some sort of foldable iPhone coming next year. I anticipate them eventually turning it into a standalone line like Samsung has done. I actually had the chance about a week or a week and a half ago or so to try a tri-fold phone. So it's not one fold, it's two folds. And instead of folding out to the size of like a small tablet, it folds out to the size of a full screen, a large tablet. And it's a pretty remarkable piece of technology. Very expensive, right? I saw on eBay they're like a few $1,000s, maybe up to $5,000 because you have to import them from China. Huawei has one, Xiaomi has one, a few other players have one. But I think trifolds are something that Apple should give a shot at. But it'll probably be 5 years before they do anything remarkable with it.
Hey, Mark, before we move on, I mean, does Apple have to be worried about these tariffs that are being levied by the United States against China?
The issue with the tariffs is that while Apple has made price adjustments due to currency fluctuations, you've seen this happen in Turkey and Russia and other places internationally, there's a lot of risk doing so in the United States, given the heightened competition and that phone prices are already so premium, right? North of $1,000 for most iPhone models at this point. So I definitely would anticipate some moves needing to be made, but I'm leaning towards the company eating some of those costs if Cook is not able to get some sort of reprieve from Trump.
He was able to get a reprieve in the first Trump administration. Remind us.
He was able to get a reprieve in the first Trump administration. The iPhone didn't end up getting tariffed to any substantial degree. Obviously, importing from China, there is a few percentage point tariff already, but we're talking about Trump stacking up an additional 10%. And back in the first Trump admin, I mean, there were talks between 15 and 25% for tariffs, even more, right? And so this is going to be an interesting thing to watch to see how this is going to impact Apple. Of course, they're not going to let it impact their revenue, which is what Wall Street watches, mostly. But there is the anticipation that it could impact gross margins and net income and profit down the road. They don't anticipate that happening in the current quarter because their guidance on margin has been pretty much the same as it always is, somewhere between 45 and 47%.
Yeah, they have a little bit of a cash cushion, right, on their balance sheet that can help them out with this.
That's a good point. Mark, how much have they diversified the supply chain outside of China? What has Foxconn done in India, for example? Anything meaningful in recent years?
They've diversified in meaningful ways, but I would say in immaterial ways. So a lot of the diversification so far have been on the lower end iPhones. They're starting to do some of the Pro phones in India as well. But production of the iPhone, I would still say, is 90% plus occurring in China for so many reasons. They're used to making them there, the precision, the employee culture there, right? Macs is where we've seen a lot outside of China recently. You're seeing Malaysia, you're seeing Thailand, you're seeing Vietnam for the AirPods as well. I anticipate some more iPad production outside of China in the coming quarters. So meaningful but immaterial is what I would say.
Okay. Go ahead, Carol.
Yeah, well, one thing we want to ask you, too, about an ad last night that caught at the Super Bowl during the broadcast that caught the attention of many. T-Mobile's tie-up with Elon Musk's Starlink satellites for texting and data usage off the grid. The whole idea is, you can't always get a signal off the grid, but you can with Starlink. Not new. I think there was a story last week that we were talking about. But hearing that now it will be opened up to people on other carriers, what do we need to know about that? A big deal? There's also an Apple connection there.
I think it's hugely significant, and I don't think this is going to stop at T-Mobile. I would anticipate all the wireless carriers coming up with their own satellite infrastructure or satellite partnerships. It's interesting because Apple launched their partnership with Globalstar for essentially identical functionality back in 2022. They've been working on this since around 2016, 2017. They hired some senior Google satellite folks to run this project. this is something where they're now competing with the carriers that they use as partners, right? So Apple has to play ball here, and it raises the question of what was the point of this tens of billions of dollars in extra infrastructure that Apple has invested in and spent money on for something that the carriers are going to do anyways. And so we'll see what consumers tend to do. Do they want to use the built-in Apple approach? Do they want to use the approach from carriers? I think it's going to come down to pricing. T-Mobile is going to charge $15 a month for this service. We'll see what other carriers charge. It's free if you have the highest tier. Right now, Apple doesn't charge anything. And so I think the only way that Apple wins here is if they undercut on pricing, because from a feature standpoint, it seems like T-Mobile is going to have the leg up.
Who can use this? Like, which iPhones do people need to have, and can truly any carrier? Like, if I'm Verizon or AT&T, I can just sign up for T-Mobile's plan for $15 a month extra and get coverage everywhere?
Yes. So you have to have devices that can handle multiple SIMs. So right now there are some iPhones with a physical SIM and the ability to tack on a digital SIM on top of it. There are iPhones, the last few of them do this, where you can have digital SIMs for multiple carriers. So you can have one iPhone, you have a Verizon line and you have a T-Mobile line. And so the idea is if you have a Verizon line on your phone right now, you can add a second line by signing up for a T-Mobile account and getting a T-Mobile eSIM just for satellite connectivity, and pay that $15 a month. Yeah.
Hey, listen, before you go, we have about a minute and a half or so still to go. Peloton and also Sonos last week. Peloton, first of all, their profit beat, they raised guidance. We saw their shares move up on it. You follow Peloton as well. It's just such a different beast from what it was, coming off the pandemic and during the pandemic. What are you hearing about kind of the way forward for Peloton?
I mean, so far, in terms of the financials, we're not seeing any positive momentum to growth. What we're seeing is that their cost-cutting measures, essentially under the last CEO, they ran the company, torpedoed it completely into the ground, firing thousands of people, getting rid of so many different partnerships and agreements they've had, making major supply chain changes. And what you're doing is you're seeing profit, not because of growth and better sales and better economics. You're seeing profit because their expenses now are so low because they've torpedoed it into the ground, like I said, right? And so now you're sort of giving new CEO Peter Stern a window to begin making some changes. He's a brilliant guy. He was hugely successful at all his prior stops, Time Warner, Apple, Ford. He was only there for a short period of time, but he had some great ideas there. And if anyone was going to turn Peloton around into a digital subscriptions business, they've basically got the expert now, and he has that new path forward because the prior CEO ran into the ground, and it's basically a blank slate for him. So I'm seeing some positivity there for the future. In terms of Sonos, this is another company that's being run into the ground.
Yeah.
I would anticipate them to have to sell off in the future. I don't think they have a standalone future.
I was able to use my Sonos this weekend, so I think things are moving in the right direction. It's back online, Carol.
For now. That makes him happy. Hey, Mark Gurman, you make us happy when you join us. Thank you so much. Chief Technology Correspondent at Bloomberg News. Be sure to check out his Power On newsletter. You can catch it every weekend.
Hey, a redhead crossing the Bloomberg Terminal. Morgan Stanley has kicked off a $2.97 billion loan sale for Elon Musk's X. You can check out more details of that on the Bloomberg Terminal. In the meantime, seeing some red across the screen, the NASDAQ composite higher by 1.2%. The S&P 500 up by 0.7%.
When we come back, a check on the muni market. This is Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Back to work Monday. Stocks are pushing higher with the Dow, the S&P, NASDAQ all advancing. S&P right now up 43 at 6,069, up 0.7%. Stocks are kicking off the week with gains. The Dow up 157, up 0.4%. NASDAQ up 218, up by 1.1%. Equities rebounding after a slide that was driven by concerns over inflation and tariff threats. The 10-year at 4.49% with the 2-year 4.26%. Gold now up $42 the ounce at $29.03, a record on gold, up 1.5%. West Texas Intermediate crude up 2.1%, $72.47 a barrel. Microsoft up 0.6%. It is under investigation from the French Antitrust Authority amid concerns the tech giant is degrading the quality of results when smaller rivals pay to use Bing technology in their own search engine products. Meta Platform shares right now are trading higher, up by 11 cents, little change, but higher for a 16th consecutive session. Recapping, S&P up 43, up 0.7%. Spot gold at a record $29.04 the ounce. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet there. Thank you so much. All right, well, the state and local government debt market is poised for another strong year in terms of issuance and demand from retail buyers, provided federal lawmakers maintain the bond's tax-exempt status. This is according to investors and bankers, Tim, who took part in a Bloomberg panel discussion that was late last month.
Meantime, the Bloomberg Muni Bond Index is up just under 1% so far this year. With some thoughts on the Muni market as well as a Super Bowl tie-in. Yes, there's a Muni connection to everything. We're going to get to that in a moment. We welcome Dan Close, head of municipals over at Nuveen. It's got $1.3 trillion in assets under management. Dan joins us from Chicago. Dan, we're going to talk stadium financing in just a minute, but we got to talk the tax-exempt status of Muni bonds, because I'm wondering if you think the Republican Congress will eliminate the tax exemption to help pay for the extension of the Trump tax cuts.
First, thank you so much for having me on the program here today. Certainly this time around, there is, I think, a threat to the muni exemption that we haven't had in a long time. And so if you look at all the pay-fors that need to go in and roll the Tax Cut and Jobs Act, the House Ways and Means did put out potentially all 50 or so different pay-fors, and municipal exemption, at least specific to hospitals, private activity bonds, we're on that list. So we're certainly watching this, we're monitoring it, but I think given that all of infrastructure in the United States is financed at a local level with the muni exemption, our estimates $826 billion in savings over a 10-year period for the exemption for your local high school, your local water and sewer authority. We think we end up okay, but certainly it's going to be a fight to keep the exemption this time around.
But safe to say, all right, so it is a defining feature of the $4 trillion asset class. So what would it do to the muni market if that exemption goes away?
Yeah, sorry to cut you off. It would certainly raise the cost of any of your projects. So if you're a local school district, your high school's overcrowded, you need to go in and issue debt to go in and to finance a new high school. If all of a sudden the exemption went away, you're going in and financing that local infrastructure at a taxable level. So we estimate that's another 200 basis points, 2% of higher financing cost if that were to go away. So all this local infrastructure projects, we think could get a lot more expensive if the exemption were not to be rolled.
So let me just ask one follow-up to that. So
Sure.
potentially that could, if it's a higher cost to do this project, it's more financial stress potentially on municipalities, right? Or is it a case that projects don't get done because the cost has gone up? And I think about the economic impact of that.
Yeah, and I think it could certainly be both. Projects that at the margin become too expensive don't get done. We saw that in 22 and 23. There was a bunch of airports that were up on the block to go in and to have expansions. When materials became too much, when the cost of inflation was up, we saw some of those projects get deferred. And in the similar way, if it does become too expensive, some of these critical infrastructure projects could be delayed, or at the very least, become much more expensive, and that would put some stress on municipalities and their finances.
So it could be an economic impact, right?
Certainly, and I think anytime you go in and raise the cost of just providing, essential service infrastructure at the local level, it could very much have an economic impact. And we're certainly trying to make the case. Every congressperson has a home district. We're making the case of all the different projects that are being done and financed in each congressperson's home district, and how much more those projects could cost if, in fact, the exemption did go away.
Well, on that point, is Nuveen specifically lobbying Congress to keep the tax exemption for munis?
Yeah, we're having conversations with our government relations folks, which is more at the state and local level, and just reminding everyone in Congress again of all the different ways that muni finance does go in, help their district. And we think with such a narrow majority in the House, with two very supportive members on the House Ways and Means, will ultimately prevail. But in 2017, with the Tax Cut and Jobs Act, the muni market had to give up pre-refunded bonds. And it might be the case that private activity bonds issued by healthcare providers, higher ed, for instance, might go in and have part of their exemption chipped away as a potential payer.
Hey, Dan, how do you look at the involvement of the federal government with different states when it comes to munis? For example, California and New York, huge when it comes to muni issuance, but
Right.
Donald Trump, not a big fan of the way that these states are run. He's been outspoken about that. What's the risk factor there?
Yeah, I mean, the Trump administration, just by our own history, was very supportive of municipal bonds and of the market during its first term. If you look at by the numbers, $4 trillion, Carol, was the number you had mentioned as far as the size of the market. That's roughly divided fairly equally between red states and blue states as far as what amounts of bonds are outstanding. So certainly, despite anyone's political leanings or states leaning one way or another, certainly every local government, every state government is availing themselves of this exemption and is certainly using that. So, we don't think that the administration is hostile towards munis in any state, in any way. We think they see the benefit of going in and having infrastructure choice, if you will, that infrastructure decisions are made at a local level. And I think that really is fairly congruent with what we understand that this administration is trying to accomplish.
Hey, we're kind of working our way across the country with you. Kind of question about Nuveen and if it has plans to buy high-yield bond being issued to help finance Brightline West. That's that high-speed rail line that's going from Southern California to Vegas.
We are taking a close look at it. We just had the bankers in, the issuer into our office just last week. We're taking a close look at it. We've certainly been a supporter of Brightline East in Florida, and certainly are taking a close look at this deal, which should be coming in the next couple of weeks.
Okay, well, let's talk stadium financing when it comes to munis in the wake of last night's Super Bowl. Just how much are munis involved when it comes to stadium financing around the country right now?
Yeah, very much so. I mean, there's currently an ask of about $13 billion or so in stadium financing by 12 different municipalities. And just taking a step back, it's not going to finance, the scoreboard. It's not going to finance actually inside the stadium, the turf on the field. Most of that is all privately raised as far as actually building the stadium itself. Where munis come into play is just all the wraparound financing. I'm here in Chicago, huge Bears fan. The Bears are asking for $2.4 billion for their new stadium on the lakefront, but none of that is really for the stadium itself. It's for public transportation, a new bus depot, extending the water lines, the sewer lines, extending all of that critical infrastructure in order to actually build the stadium. So we're seeing a lot more asks of municipalities to go in and to help finance that wraparound financing before the stadiums do come in.
All right, this was really cool. The muni market, a massive market. I feel like we covered so much ground. Dan, come back soon. I hope we can do that.
Thank you so very much. I do appreciate it.
All right, same here. Dan Close, head of municipals over at Nuveen, $1.3 trillion in assets under management. As we know, munis about a $4 trillion market, so massive. Dan joining us there from Chicago.
Off our best levels of the day, at least when it comes to the NASDAQ composite, but still up more than 1% there. 0.7% to the upside, 0.3 on the Dow.
All right, still to come, Coke, you know them, of course, for their sodas, and yet that category, not their fastest growing brand. We'll explain when we come back.
Moo.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week here from Bloomberg headquarters in New York City. I'm Carol Masser along with Tim Stenovec. Interesting week. We're going to actually hear from Jay Powell. He's going to be making some comments. We'll see what he has to say about the U.S. economy, how he rolls in everything that's coming from Washington in terms of tariffs and so on and so forth, or planned tariffs or delays in tariffs, or more to come, and what might be the economic impact and how it kind of impacts Fed policy. So that's certainly on our radar this week.
We talk a lot about the ads from last night's Super Bowl. One for milk that you saw? I didn't see one, but I didn't watch the whole thing.
No. There's a lot of beer. There's a lot of snacks. I really loved Budweiser having the Clydesdales back. Made me so happy, and the whole idea of how it ended with when a horse walks into a bar. It was really kind of silly,
I haven't seen that
really
one.
Fun.
We're going to talk more about the marketing behind some of these ads and the spend behind some of those ads a little later in our program, Bloomberg Business Week. But you remember the long-running campaign, Carol, in support of drinking milk, Got Milk?
I love it. Love it. It was print ad. It was TV ad. It was really, really well done. Well, along those lines, did you know that one of the best-known soda companies in the world has actually gone all in on milk, so much so that it's its fastest-growing U.S. brand, Tim?
With more, we welcome Bloomberg News Atlanta Bureau Chief Brett Pulley joining us from there. If we're talking about a soda brand in Atlanta, Brett, there's only one company we can be talking about, and that, of course, is Coca-Cola. What's their foray into milk?
It's amazing. Well, you know, who would have thought that milk, of all things, would have become so crucial, not just a success for Coca-Cola, but, you know, sort of crucial to its success going forward, and also crucial to CEO James Quincy's plan and goal to pivot the big soda giant away from sugary drinks. And so now here's Fairlife, which they started about 10 years ago in a partnership, is now they're Coca-Cola's fastest growing brand in North America, and is about to come at a cost, total acquisition cost of about $7 billion, which is also the company's largest acquisition in its history.
Really fascinating. What is it that's kind of unique and maybe interesting to consumers about Fairlife?
Yeah, well, it's what they call ultra-filtered milk, and it goes through this filtration process, and as a result, it's 50% less sugar, no lactose, and 50% more protein. And so, of course, you know, we're now in this environment where people are really leaning in on protein-heavy diets, especially people who are on GLP-1 drugs. That protein helps you maintain muscle. And so along comes this, you know, protein-enriched milk, and then they also have some protein drinks as well that are doing very well.
Yeah, they've got these super tasters who are drinking milk in headquarters. What tastes different?
Hey, you know,
I thought milk was milk.
Well, hey, look, that's Coca-Cola's culture. You know, that's one of the fun things about this story. We do kind of, I think, you know, get inside the culture in addition to looking at the challenge that, you know, management is facing with the, you know, demise and consumption of carbonated soft drinks. At the same time, you know, they are very much like the old Coca-Cola, and Coke, of course, famously has a formula that is locked away, you know, in some triple vault somewhere for its iconic cola. And so it's not too terribly surprising. But yes, they're in Chicago in Fairlife's headquarters. They have super tasters, so people who make the final decisions on the secret formula.
All right, I have to say, I actually got to tour where that secret formula is with former CEO Muhtar Kent a few years ago, which was a lot of fun. The other thing is,
did they tell you the secret? The secrets?
No, they didn't. I wasn't able to pull out my phone and take pictures. But the other thing is, Brett, you know, I toured their archives, and what was kind of cool is just the history of this company, but also they have been for years, like going into other brands and juices and waters and so on and so forth around the globe, really to try to diversify beyond sodas, especially as consumer trends have changed. Having said that, right, the bulk of their money and the mix, I mean, it's still largely from soda, right?
It is. It's still largely soda. About 60% of the revenue still comes from soda pop, and that's from, you know, Coca-Cola and Sprite and Crush and all of that stuff. And then the rest of it comes from some of the juices, Minute Maid, Simply, waters, energy drinks, sports drinks. But yes, they are still very much a soda pop company.
And is Pepsi, its competitor, very much a chips company? Just in 30 seconds.
What's that, a what company?
A chips company, like Frito-Lay.
Yeah, I mean, that's the thing. Yeah, they have the chips business, and they also, of course, you know, have the breakfast business, as they call it, with the Quaker brands as well. So, yeah, they're a different business indeed. I mean, they are, no doubt about it, Coca-Cola's main rival with Pepsi-Cola, and it's a big company as well, but you're right, they're more diversified.
Well, this is certainly turning out to be an interesting bet, right? And one that's paying off for the Coca-Cola CEO. Brett, cool story. Great deep dive, peeling back kind of the layers of what's going on at the Coca-Cola company. Brett Pulley, of course, our Atlanta bureau chief, joining us from that bureau. He is, of course, a part of our Bloomberg News team. Hey, listen, for those watching on TV, the close is coming your way in just a moment. Tim and I continuing on Business Week. Where are we going?
Hey, we're going to that big take today. Musk's Doge pick led cybersecurity cuts at Citrix. That's next on Business Week.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. We're watching as the courts debate some of President Trump's attempts to cut federal spending. One federal judge ruled today the administration has not fully followed his order to unfreeze federal spending. He's ordered the White House to release the money. Another judge is holding a hearing this hour on Trump's offer to buy out federal workers. A deadline is approaching for workers to accept that deal, as Weijia Jiang reports.
The judge actually paused this order last week and imposed a new deadline, which is tonight at midnight. More than 65,000 federal workers have already accepted this deal, and that's more than 3% of the government workforce. But the judge said he wanted to learn more about the merits in this case. So this afternoon, we expect both sides to be arguing on the legality of this.
President Trump's budget chief has sent an email to Consumer Protection Agency employees telling them to stop working. Jim Kursula has that.
There are fears the federal agency will be gutted. Chuck Bell is a financial policy advocate with Consumer Reports.
This is highly concerning. The CFPB is a vital federal agency that helps millions and millions of consumers to resolve their financial problems.
The Consumer Financial Protection Bureau has recovered some $20 billion in relief for an estimated 195 million American consumers since the agency was formed after the 2008 financial crisis.
President Trump was to impose a metal tariff today. Here's business reporter Jason Brooks.
An extra 25% import tax will wind up costing U.S. manufacturers for products ranging from autos to appliances and beer and soda makers. And because it's a tariff on raw steel and aluminum, U.S. firms making things like nails and fence wiring will also see higher costs to make their products.
The head of the Office of Special Counsel has now sued President Trump. Reporter Stacey Lynn has that.
Hampton Dellinger says he was informed of his firing in an email on Friday. He led the Office of Special Counsel, which is responsible for enforcing laws related to federal employees, in particular protecting whistleblowers. In the lawsuit, he says the special counsel can be removed only for inefficiency, neglect of duty, or malfeasance in office.
The Gaza ceasefire between Israel and Hamas is on very shaky ground today, with Hamas threatening to delay the release of more hostages. President Trump said in a Fox News interview Gazans may not have the right to return after his plan to rebuild. He's been urging allies in the region to accept them. So far, they've refused.
I think I could make a deal with Jordan. I think I could make a deal with Egypt. You know, we give them billions and billions of dollars a year.
On Wall Street, the Dow Jones Industrials currently up 138 points. This is CBS News. A documentary about one of the biggest hit makers of the 60s and 70s is making its streaming debut. Correspondent Peter King.
Sylvester Stewart is often described like this.
Do you believe in the concept of black genius?
You know him better as Sly Stone, as in Sly and the Family Stone. His music ruled the airwaves during the late 60s and early 70s and influenced generations that followed. The Hulu documentary was produced by Questlove, who's become as much of a filmmaker as he is musician, and it promises to tell Stone's complete story, good and bad.
The anxiety, the pressure, the drug use.
Sly Lives, The Burden of Black Genius, streams starting Thursday. Peter King, CBS News.
Pop star Ed Sheeran got in trouble with Indian authorities after playing to a surprised crowd at a retail center. Police say his permits are for his concerts only. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are 55 minutes away from the close on this Monday. Carol Massar, Tim Stenovec, live here in our Bloomberg Interactive Broker studio here at Bloomberg headquarters. We are on YouTube. We are on Bloomberg Originals. We are on radio, as you know, and we're looking at a market. We're going to get into it in just a moment, but you're pretty much hovering near our highs of the session on both the S&P and the NASDAQ 100, but those big cap tech names once again released some outperformance there.
Did you actually watch the whole game?
No, I watched the first quarter, some of the pregame show. I watched some of the halftime show, and then I kind of started to drift off. And then I came back for the start of the second quarter, saw the Chiefs their first touchdown, and then I fell asleep. And the last thing I know, I woke up and it was really late.
Yeah.
My husband abandoned me on the couch. He was like, I'm out of here.
We're going to be talking a little bit about
that was a long story.
We're going to talk a little bit of the ads with about a marketing exec. He's an alum of Victoria's Secret, Avon, and more a little later in our program.
I do drive him crazy, though, because
What?
he liked to zip through the commercials, because sometimes we're on delay because we're making
pause
nachos.
it or something.
We're making nachos or something. Yeah, exactly. And I'm like, I need to see the commercials. I need, it's what I want to see. So I'm glad I did, because we're going to talk about it.
I mean, I think a lot of people would say it was the best part of the game.
Yes, indeed. Hey, did you mention among the most read stories that we're going to talk about?
No. Musk's Doge pick to lead cybersecurity cuts. He led cybersecurity cuts at Citrix. Hacks followed. We're going to talk a little about who he is and what his work at Citrix, which, by the way, he still does, can tell us about his work at Treasury.
Yeah, it's also a story in Bloomberg Market, so looking forward to that. And where are you going this year in terms of travel? Are you going anywhere kind of cool?
No. I have nothing. I have nothing planned. I only have work stuff planned.
That's so sad.
It's so sad. I know. I was actually thinking about this. My wife and I used to sit with the Bloomberg Pursuit section about the places to go this year, the New York Times places to go, and pick a few places. We haven't done that since kids.
And then you have toddlers.
Yeah, but one day we'll do it again.
You will, you will. All right, first up, let's get a check on the trade on this Monday. Let's turn things over to someone who travels a lot, our own Charlie Pellet.
I do indeed. And here's what's going on. We got stocks on the move today. They're traveling higher right now. But the Dow, the S&P, NASDAQ, all in the green. 43-point jump right now for the S&P at 6,069, up by about 0.7%. The Dow up 145, up 0.3. NASDAQ, tech names ripping higher, up 219 points on the composite index, up 1.1%. NASDAQ 100 index up by 1.3%. The 10-year at 4.49%. The 2-year currently yielding 4.26%. Spot gold holding above 2,900 the ounce, 29.04 right now, up 1.5%. West Texas Intermediate crude up 2.1%, 72.48 a barrel on WTI. Bitcoin up 2.3%, 97,445 on Bitcoin. As for the market backdrop, Victoria Fernandez is chief market strategist at Crossmark Global Investments, and she was interviewed this morning on surveillance.
There's such conflicting stories, whether you look at the labor market, whether we look at ISM numbers, whether we look at consumer spending and savings going down. There's so many different stories that are out there. It tells us the Fed is probably going to stay on hold because they don't have a clear picture of where that's going. And businesses are going to stay on hold for a little bit until they get a clearer picture of what's going on.
Victoria Fernandez of Crossmark interviewed on surveillance. Again, recapping, S&P up 43, up 0.7%. Gold trading at a record. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, it is today's big take and one of the most read stories on the Bloomberg terminal about Tom Krause, a veteran tech executive who's now a special government employee or consultant at the U.S. Department of the Treasury.
Yep. In his other role, though, he is CEO of the cloud software group, which owns Citrix Systems. We know, the company that provides remote access for a whopping 400,000 customers. And before it was taken private, Tim, regularly disappointed investors.
Well, at Citrix, Krause dismissed engineers and slashed expenses after that leveraged buyout. Then came the hacks. Jordan Robertson is Bloomberg News cybersecurity reporter. He joins us from London. Check out his story from the Bloomberg Big Take on the Bloomberg Terminal and at Bloomberg.com/Big Take. It's after 8 p.m. in London. Jordan, we thank you for staying up late and staying at the office late to hang out with us to talk about this big take. Who is Tom Krause?
Sure, yeah, thanks for having me. So Tom Krause is, as we all know now, he's Elon Musk's, Doge pick for the Treasury Department. But that's only one of his jobs. His day job is as CEO of Cloud Software Group, better known as Citrix Systems. That's the company that had existed for, more than 20 years before it was acquired in 2022 by two private equity firms, Elliott Investment Management and Vista Equity Partners. The price tag was $16.5 billion. What our reporting found was, number one, that debt load has grown. It's now at $18 billion. The company has really punishing annual interest payments of $1 billion a year or more. And that's relevant because when Krause was tapped to be the CEO of Cloud Software Group, or formerly known as Citrix, he had to find a way to make those payments. That this is the job of any private equity backed CEO, is kind of managing and servicing the debt. And one of the key ways he's done that is by laying off thousands of employees of the company, including most of the security team, and within that, including most of the product security team, whose job it is to keep Citrix technology secure. And the problem with that is that there's a family of Citrix products called NetScaler. These are VPN devices, these are firewalls, these are security appliances that sit at the periphery of corporate and government networks. They're being attacked more and more by advanced attackers, including Chinese state-sponsored hackers, ransomware groups, and basically any other hacking group you can think of. So these devices are under increased threat of hacking attack at the same time as Krause is very deeply cutting costs at this company. And according to our sources, and we spoke to about a dozen former Citrix security employees, they say that left the company's products more vulnerable to hacks. And indeed, those products did experience more of kind of the most serious types of attacks, which are called zero-day attacks, which just mean vulnerabilities the hackers found before the company did.
Well, it's kind of like, you think about government when they would put out for a contract and they wanted to go to the low-cost provider, that maybe it wasn't always the best thing, that sometimes you got to spend to make sure, people are kept safe, programs are kept safe. So having said that, these cuts at Citrix, can we assume that some of these cutbacks and the own hacks that internally the company might be seeing in some of their programs, that hacks makes their programs vulnerable to any of their customers that are using them, including the federal government?
Yeah, so that's what effectively happened. There was a series of attacks that were disclosed after the acquisition closed in late 22. There are two hacks in particular that were pretty serious attacks of Citrix customer networks that were disclosed after these layoffs began. An analogy that some sources have used is like buying an old car. When you buy security software, it's like buying an old car. It might work, but you're going to need more and more maintenance every year. It's not just a one-time investment. You have to really kind of care and feed, these things. Otherwise, hackers are doing this. Hackers are looking for bugs too. They're investing a lot of resources in finding bugs in these products to exploit them and hack into networks. So if you're not also investing the resources to do that, the hackers might win that race. And in Citrix's case, our reporting was, in at least these two major incidents in 2023, that's what happened. Now, I should note, the company says that since the acquisition, their defenses have improved. They point to some measures, that they've taken to try and shore up their defenses. But the bottom line is the level of cuts at that company were very serious. They were very serious to the security department. And now that Tom Krause is at Treasury, this kind of background gives us a sense of kind of some of the types of activities and the types of actions he could take at Treasury as part of this cost-cutting effort in the federal government.
What exactly is his role at Treasury? Because as you mentioned, he still does have this day job as CEO of a company that has $18 billion in debt on its balance sheet and is owned by private equity investors.
Yeah, it's a little unclear. His official title is Fiscal Assistant Secretary. Apparently, that's a part-time job. He is a consultant, special government employee. The Treasury Department has said that he only has read-only access to Treasury's sensitive, payments data. What that means is the Treasury Department is trying to assure, citizens that Krause and other Doge staffers can't make any changes to the data directly. they certainly can inform them or influence them, through other means. So it's a little unclear what his role exactly is, but the Trump administration has, promised its goal has made its goal of cutting $1 trillion at least, from the federal government, and the Treasury is kind of like that is the place where a lot of that would happen. It's called, America's checkbook, the Treasury Department systems. And Tom Krause now sits effectively in control of that through DOGE. Now it's being fought in the courts. There's a restraining order in place as we speak, against any further actions being taken. But that will be adjudicated in the courts, and we'll kind of see if that stands, or if he's allowed to to kind of start to affect these cost cuts that Elon Musk and Trump have talked about.
Well, I guess what's interesting, and I want to be careful not to paint kind of all private equity with the same stroke, if you will. In other words, not all private equity maybe leads to bad outcomes, but there are criticisms that private equity, that's what they do. They make lots of cost cuts. They load up debt. Is it safe to say, I think there's somebody you quote, in your story, the Washington office of Rogers Joseph O'Daniel, it's a law firm specializing in government contracting, saying he worries about Krause using private equity strategies at the federal government. Is that kind of the crux of kind of what you were looking into?
Yeah, to your point, not all private equity is the same. What we're looking at in this story is particularly these kind of mega leverage buyouts. There's a lot of research around this topic of, what is the impact of private equity on certain types of businesses. And what's generally very clear is that when you have these really large leverage buyouts, tens of billions of dollars in debt, billions of dollars in interest payments, there are only so many ways companies, can actually pay those debts and make their investors whole. In the case of Cloud Software Group, that was through very large staff cuts, and that's exactly right. We've talked to sources, some of whom are in the story, who say that when you apply that type of private equity model to the federal government, you may wind up with a very different outcome than people expect, because at Cloud Software Group, Krause has laid off thousands of employees. When you scale that up to the federal government, you're talking about tens of thousands, hundreds of thousands, potentially even millions of employees. And the outcomes of there are much harder to predict. The impact to people is much different than a technology becoming more hackable when you're talking about possible cuts at that scale.
Right. Many have talked about institutional knowledge and what might be potentially lost. That is certainly one thought that is out there. Hey, Jordan, thank you so much. Jordan Robertson, cybersecurity reporter at Bloomberg News. Thank you so much for staying up. He's joining us from London. It is among our most read stories, and it is a Bloomberg exclusive.
Hey, coming up on the Bloomberg Business Week, we talked to Broadridge CEO.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks pushing higher with the Dow, the S&P, NASDAQ very much in the green. NASDAQ 100 index, full of those big tech names, up now by 1.3%. To put that in context, S&P up 0.7, the Dow up 0.3%, and with 39 minutes to go ahead of the close, NASDAQ up by 1.1%. The 10-year 4.49%, the 2-year 4.26%. Spot gold at $29.05 the ounce. Gold at a record today, up 1.5%, now surging by $44 the ounce. West Texas Intermediate crude up 2.1%, $72.46 a barrel on WTI. So stocks are kicking off the week with gains. What is behind the recent advance so for equities? Cameron Dawson is Chief Investment Officer at New Edge Wealth. She was interviewed this morning on surveillance.
We're going up because there still is this risk-on notion that you are going to see a benefit from policy out of Washington. You still are seeing earnings go up. So if you look at fourth quarter earnings, you went into earnings season expecting 12% growth. You're getting 16% growth for the fourth quarter. But watch this closely. You're actually seeing 25 and 2026 estimates for the S&P 500 get trimmed just slightly.
Cameron Dawson of New Edge Wealth. McDonald's says low-income consumers in the U.S. are still under pressure. This as McDonald's sales rose in the fourth quarter after growth in the chain's international business made up for a decline in the U.S. McDonald's right now up by 4.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie. Really do appreciate it. Well, shares of the $28 billion market cap fintech company Broadridge Financial Solutions hitting an all-time high today. Broadridge provides infrastructure for capital markets. They do wealth management, corporate governance, and more. The company did report earnings at the end of last month. They reported revenue and EPS for the second quarter that came in above estimates. The company also reaffirmed its adjusted earnings per share forecast for the full year. We've got with us Tim Goki, CEO over at Broadridge. He joins us from New York. Tim, explain exactly where Broadridge plays in the market.
Yes, well, thank you. Thank you for having me today. And Broadridge is, we have a unique position because the real core of what we do is a network that connects every individual investor to every public company, to every wealth manager, and every fund, all around the topic of corporate governance and communications. And that, it gives us a unique vantage point at the center of capital markets, wealth management, and corporate governance. And we did have good results in the quarter. With recurring revenues up 9%, earnings up 70%, but we're a bit of a seasonal business and there's some timing in there. So we affirmed, as you said, earnings of 8 to 12% for our full year, which ends in June. And also that we expect to meet our 3-year guide, which ends a year from June. I think what's...
Yeah, Tim, I just want to jump in. How dependent are you on companies IPOing?
Most of our business is ongoing and it's around companies that are in business today. So when there are IPOs, that's a good thing. That makes more companies and it's helpful. But it's our business is not dependent on that. It's a nice tailwind when it happens.
Hey, one of the things I want to ask you, Tim, you said, this unique vantage point that you have into capital markets and wealth creation. So tell me that unique vantage point, what it does tell you about what's going on in capital markets right now, what you are seeing or what it is you're seeing in terms of investor psyche and what you're seeing about wealth creation.
Absolutely. I think we're really seeing an ongoing revolution in how people invest. And I think there are really 3 trends behind that. One is increased participation. We're definitely seeing that in our numbers with the number of positions that shareholders hold up by double in the last 5 years. The second one is increased access to more products, more financial products. We're seeing that with liquid alternatives, with managed accounts, but especially now with crypto and where that is going to go over time. And the third is really there's an increased interest in governance and getting involved in what large companies are doing, especially among younger people.
What does governance mean, especially in an environment where when it comes to factors like ESG or DEI, diversity, equity, and inclusion, you are seeing companies roll back on that. And, it certainly, I think it's safe to say that folks would say they're taking their cues from society, but really from what's going on in the federal government. So what does that really mean, increased governance?
It is, shareholders have an opportunity each year to vote for the board of directors and for proposals that come forward. And most companies have their annual meetings in the few months that are just coming up. We're just beginning the proxy season between now and really the end of May, as when most companies will have elections, and shareholders have a chance to weigh in. The number of proposals, especially around ESG matters, peaked a couple of years ago, and also support for those proposals a few years ago was as high as 40%. It's been coming down over time. Last year, it fell again, both the number of proposals and support specifically for ESG. So shareholders do have the opportunity to make their voices heard, and I encourage everyone listening to vote when they have that opportunity. I think a real innovation that's happening, though, is that fund companies are saying, we don't want to be in the business of voting on behalf of our shareholders. We want to push that opportunity back to the shareholders themselves. And that is something called voters' choice or pass-through voting. We did that for 8 funds 2 years ago. We did it for 100 funds last year. And this year is going to be more than 400 funds. So that's a rapidly growing trend of giving people the opportunity to vote not only on the companies they hold directly, but if they own a mutual fund, the opportunity to weigh in on the decisions for those companies as well.
I am very curious about crypto. You mentioned it, and you said that we'll see what happens. You basically said, we'll see what happens with crypto this year. What do you think happens to crypto this year?
Well, there's obviously a lot of investor interest in that, and there's been a lot of challenge the past few years where really it's a new asset class. There needs to be a strong framework around it so everyone understands how to play. And that hasn't happened in the past years. It's just been really enforcement, but against unclear rules. And I think the new administration is very committed to working with Congress to put in place a clear set of rules and guidelines around crypto. And, we think the key to this, if you think about the growth of other recent asset classes, take ETFs, which are huge today. They were nowhere 25 years ago. One of the real things behind them was good disclosure for retail investors. And ETFs took the disclosures that were that were mutual funds were already using. They adopted that same framework. And we think that adopting a similar sort of disclosure framework for crypto assets could be something that would really allow people to invest in it with much more confidence.
In general, how do you see the new administration and policies that might come out? I think businesses initially think it's going to be an easier regulatory environment, much more business friendly. But what does it mean specifically for Broadridge?
Yeah, I think for Broadridge, it's probably not as big an event as it is for many other companies. Certainly, there's a lot of optimism about capital markets, about the direction of the economy, and M&A, and those things are all mild positives for us, as you asked me about the question about IPOs. So it's a positive. When you think about the biggest priorities of the administration around taxes, tariffs, immigration, cultural issues, those are pretty neutral to what we do. And then there's a set of issues that are specific to financial services that are not nearly as much administration priorities, but I think there will be change. Crypto is probably the highest on those, which that is a more important one. I think there is also interest around shareholder engagement and how to get that right, as well as how to continue digitization in the economy.
So how is your company preparing for...
things we think are all positives for Broadridge.
So how is Broadridge preparing for an onslaught of crypto customers? And how would they use you as a client?
Yeah, I think for us, the biggest area is around, what we do is helping have clear disclosure of what is the risk and return for your different investments so that investors can make their own choice around risk. And with crypto, one of the challenges is there's no real one source of truth because it's decentralized, right? So we have created a product that is almost a crowdsourcing to say from all the different places, when you boil it down, what is it that you're getting? What are the rules behind it? How much float does it have? How much, all the things that investors are really curious about, and bringing that together in one place. We have introduced that to the market. We have a couple of signed clients for that. And so we think that is something that can help the market. And eventually, as this grows, we think that investors should receive the same sorts of sort of routine disclosures like you would for a mutual fund or an ETF about how much you're paying and what's the performance and what are the other key parameters.
Hey, one thing I want to ask you, and we've been talking about this for, I feel like, many years, Tim, in terms of, cheaper trading platforms, the digitization, the fintech that has certainly innovated, evolved over the last few years, maybe giving more individuals access to investing in the markets. Having said that, you still continue to see the wealthiest owning, the top 1% holding about 50% of stocks, the bottom 50% maybe holding only about 1%. So, democratization, has it really happened? Or what do you see as the flaws maybe in the fintech that has evolved over the last few years that maybe hasn't enabled more Americans to tap into the equity markets? I'm not saying it's the end all or be all, but for many it's a way to wealth. And is it just a case of Americans not being paid enough to be able to tap into it, or is there something around the actual infrastructure that's out there?
Yeah, it's definitely not the infrastructure, because Americans have more access to more products at lower cost than any place in the world. And that's been the vitalization of why American capital markets are so vital, and it's been a real growth story powering us. It's definitely true that there are big gaps between what the top have and what others have, but the number of people investing has been really going up. So the participation has been broader. And then the other thing I point out is when you look at the coming wealth transfer, and I know we've been talking about this for a long time, from the silent generation and the boomer generation to younger generations, that is going to spread this out a lot as well. And some as you know, tens of trillions of dollars. And those, when that happens, those newer, younger investors are using, they're investing in a very different way. And so as that wealth comes to them, you could see pretty big shifts in wealth management and the kinds of expectations that the investors that then in the future will have the money, the expectations they have. Wealth management firms need to get ready for that now.
All right, interesting perspective. Hey, Tim, thank you so much. Great to get some time for you, or with you, I should say, on this Monday. Tim Goki, he's Chief Executive Officer of Broadridge. As we mentioned, a company that not necessarily a household name, but certainly one. It's about a $28 billion market cap, up about 7% so far here, but certainly plays a critical part in terms of the financial services structure. So really interesting to get some time with him. And
trading at all-time highs today.
Yeah.
Speaking of highs, the NASDAQ is up more than 1%. The S&P 500 up 0.7%. The Dow up 0.3%. Coming up next, we are driving to the close.
Yeah, someone who has a perspective on the glass being half full when it comes to portfolio management.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. More than 1% gain for the NASDAQ 100 index. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Hey, good afternoon, Charlie. That's right. U.S. stocks with a bid right now. The Dow currently up 154 points. S&Ps are higher by 40, and like you said, NASDAQ is up by 1%. The U.S. 10-year yield is at 4.5%. Gold is up 43 points. Oil is in the green, and Bitcoin, that's higher by 2.2%. Among the main 11 S&P sectors, leaders were energy and tech. Only healthcare and financials were in the red. And leaders to the upside in the Dow, McDonald's and NVIDIA, while American Express fell 2% and led to the downside. In deal news, Merck KG is in talks to buy SpringWorks, and after earnings on Semi fell 7%. In other news, TD Bank plans to sell its 185 million shares of Schwab. And wrapping things up, some of the names pointing after the bell tonight include Astera Labs and Lattice Semi. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, about 19 minutes to go until we wrap up the close here on this Monday. We want to mention, though, a story just crossing the Bloomberg coming from the Wall Street Journal. A consortium of investors led by Elon Musk is offering $97.4 billion to buy the nonprofit that controls OpenAI, upping the stakes in his battle with Sam Altman over the company behind ChatGPT. Let's not forget, Elon, one of the co-founders of this company, there's kind of a group of them, and he's been at odds with Sam Altman. Yeah,
I think at odds is a good way to put it, Carol.
I'm being diplomatic.
The Wall Street Journal's Jessica Tunkel and Berber Jin go on to report that Mark Toberoff, the attorney for Elon Musk, said he submitted the bid to OpenAI's board of directors Monday. Here's what that letter said. Quote, "It's time for OpenAI to return to the open source safety-focused force for good it once was," Musk said in a statement provided by Toberoff. Quote, "We will make sure that happens." It raises the question, Carol, that I have.
What?
He's got his own XAI company.
Right.
Why does he need OpenAI if he's got XAI?
I mean,
or why does he want it?
I don't know. Let's call Elon now and ask him. But what's interesting, too, is, Sam Altman has laid out some plans for OpenAI's future, and that includes converting it to a for-profit company and spending up to $500 billion on AI infrastructure through a giant venture called Stargate. So he and Musk have been fighting, and just again, the Wall Street Journal recapping this and what we have kind of talked about in terms of the conflict between Sam Altman and Elon Musk. So definitely a new development in the world of AI.
Is OpenAI for sale?
I don't know. Right?
Exactly. Yeah.
That's a good question. Yeah. So anyway, something to watch and something to add onto the list of things that we are watching on this Monday. It's just Monday, Lemon. Let's see what our next guest has to say about all that is coming at investors. Eric Friedman is Chief Investment Officer of U.S. Bank Asset Management. He joins us from Chapel Hill, North Carolina. Hey, Eric, it is good to have you here. Another Monday, another day where we are talking about potentially more tariffs. U.S.-imposed tariffs against nations that are trading partners. I don't know. How are you thinking? How does this all kind of roll into the investment environment, and whether or not you feel comfortable enough to pull some levers here, or do you sit tight?
Yeah, Carol, thanks for having us on. We still think this is a glass half full outlook for us. I think the key thing with tariffs, it really rolls into the broader conversation about inflation, of course, and for us, we think that the barometer to really gauge is what happens with the U.S. 10-year Treasury yield. That has been, if you will, the governor of risk assets for some time. So right now, with the U.S. 10-year at 4.5%, we think we're actually in a pretty good spot. Above 5, 5.25 on a sustained basis, that we think would be more problematic. So I think in general, you saw this a little bit from the University of Michigan data last week, as well as some of the chatter over the weekend and then today on tariffs, that the Fed doesn't necessarily care about what the source of inflation is. If inflation pushes them to raise rates, that 10-year Treasury we've been talking about that becomes more of a problem. So if anything, that would be the common denominator we're most focused on is what is the bond market telling us? And for now, they're at least placated with the current Trump plans.
What is the bond market telling us? It's surprising to see that it's not reacting more to tariff news. What does that tell you?
I think it tells us that there's a little bit of negotiations left on the table. You think about the dialogue with Canada and Mexico as perhaps the first salvo. That was a pretty big headline number. Then all of a sudden, at the 11th hour, there was a change in the news flow. So I think that what the bond market is saying is we actually want to see actually a finish line before completing our thoughts on is this a done deal. So I think that because there's been both the Fed, which has said, look, we're going to be guilty until proven innocent with respect to the overall inflationary environment, and you've had this back and forth across global players with respect to tariffs, that we're not yet completed, if you will, with a definitive view on tariffs. I think that's really why the bond market wants a little bit of optionality as opposed to making a definitive move here.
Is it safe to say that you're okay still investing in the U.S. equity markets as long as yields stay below 5%?
Yeah, that's very fair, Carol. I think if anything, we're seeing a level of participation from non-U.S. equities, which is certainly becoming more of a consensus long for people in my chair and other chairs. So, you have a decent global consumer, not so much in China, but Europe is in okay shape, not great shape. Again, as investors, we care most about marginal change. Are things getting better? Are they getting worse? We think that in the U.S., things are really staying the same. And with respect to especially the European consumer, they're actually getting incrementally a little bit better. So if anything, we're still very excited about the U.S. equity market, even though valuations are stretched. Valuations never a catalyst, but we're seeing some improvements in trend data within Europe. We're seeing a still healthy consumer. That leaves us a little more excited about the international picture as well.
Where specifically internationally?
Yeah, I think if anything, to the idea, Tim, that things get marginally better before the news does. I think that Northern Europe, specifically Germany, is a decent spot to be. Clearly there's a lot of political back and forth with what may happen. We also think that if you look at some of the countries there's perhaps a little bit of an over-indexing about concerns on inflation. Think about a lot of the petrochemical countries of places like Brazil. Again, Brazil has been in a very tough spot. Technically speaking, Brazil is actually okay. And so I think you have those stories where the prices will move before the news does. And so, we think that Northern Europe is not a bad spot to be. We also think that some of the energy exporters is a good place to be as well.
Yeah, it's interesting. As much as we talk about American exceptionalism, right, we also talk about the high valuations here in the U.S. So if you're looking for opportunity, although people have been talking about looking overseas for a while, it is hard to ignore maybe some of what's going on overseas. Where don't you want to be in this market environment right now?
Yeah, probably the area that we're most, let's call it, concerned with in the very, very near term would be just the long end of the bond market. Again, we think that fair value for the U.S. 10-year is probably like 420, 425, so actually a little bit lower in yield terms, up in price from where we are right now. But we still think that next leg to get us excited about duration would have to be, a successive positive events on the tariff front. The one area that's really, we think, underloved, Carol, is that part of the bond market that not many people talk about is structured credit, more asset-based financing. Those are actually sporting some pretty interesting yields, and you can actually get access to them through a number of different, ETFs and other, hard-to-access managers. But, we think that in general, the long end of the bond market is still an area that we're not as excited about. Munis would be the exception to that. Structured credit would be the exception to that as well. Those are spots that we like more than just owning, boring old long U.S. government bonds.
All right, we're going to leave it on that note. Hey, Eric, thank you so much. Great to get some time with you on this Monday. Eric Friedman, he's Chief Investment Officer at U.S. Bank Asset Management, joining us from Chapel Hill, North Carolina.
Hey, worth repeating this headline that crossed the Bloomberg terminal just a few minutes ago. Via the Wall Street Journal, a consortium of investors led by Elon Musk offering $97.4 billion to buy the nonprofit that controls OpenAI. Going head-to-head once again with Sam Altman.
Yeah, an OpenAI spokeswoman didn't immediately respond to a request for comment, so something we're going to be following certainly as we march to the closing bell on this Monday. Carol Massar, Tim Stanovic, this is Bloomberg Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're just under 7 minutes away until we wrap up this Monday trading session. As we mentioned, just rolling over from our best levels of the session on both the S&P and the NASDAQ 100. But nonetheless, we are seeing, kind of green across the screen in terms of the trade. We've talked a lot about some of the big tech names actually doing some outperforming in today's session. Some big names. If you take a look at something like Supermicro, I mean, that's up about 16% in today's session, your number one gainer in the S&P 500, and that's followed by Rockwell Automation, a different type of company, but up about 13% here. Estee Lauder is up about 6%. So that's your among your top gainers in the S&P on this Monday. Western Digital up about 7%.
I'm just looking at the most read stories on the Bloomberg. There's a few, Carol.
Yeah, where do you want to go?
I've got my eye on.
Okay.
Well, first of all, the most read story in the last hour is that Wall Street Journal story about Elon Musk leading a group of investors for a $97.4 billion bid for control of OpenAI.
That is wild.
Yeah, it's pretty wild. We'll bring you any updates to that story.
Oh, did we talk about, wait, are we going to do gold?
We're doing gold later.
Oh, we're doing gold later, right?
Yeah, I don't want to give everything away.
A little bit of a tease.
There's
Where
this story. I want to go to this LA story.
I know you did. Okay,
you knew I wanted to go here. So out in Los Angeles, where we've been covering what's happened with the fires in Altadena and in Pacific Palisades, a question that I've had, Carol, is, are people going to just sell their lots without homes there because it's such a bear to rebuild?
And maybe take a loss at it, like just like try to get out of it, right? And people saying, I really don't want it, but let me just take it off your hands, right? We wondered if there were going to be kind of, investors of some sort coming in and really lowballing people to just take the land off their hands.
Well, it turns out a lot of people are interested in those lots. John Gittleson writes about a specific cul-de-sac in Pacific Palisades where a 4-bedroom wooden stucco house once stood that's now a pile of rubble except for 2 chimneys and a few brick columns. That property went on the market 10 days after the flames ripped through the community last month. The asking price, $999,000. And?
More than 5 dozen offers later, 60 offers we're talking about. It's now in escrow for a, quote, a good chunk more than $1 million, according to the agent who listed the property. The demand for the site, which local real estate watchers say is one of the first to sell after the Palisades fire, is an early indicator of the interest in properties that were devastated by that LA area blaze.
Oh, it shows that the difficult choices homeowners are making in the aftermath of this. The seller is getting much less than the home's pre-fire value rather than waiting to rebuild on the property that she's owned.
So still taking
for 20 years.
Potentially a loss.
Yeah, I mean, you've got to wonder, Carol, what happens in this area in terms of rebuilding, who ends up staying, who ends up rebuilding, what the insurance market looks like to get those homes insured.
This house, built in 1976, last sold in 2005 for $1.54 million. It was valued as high as $2.7 million, according to Zillow estimates. The median home price, we have talked about this in Pacific Palisades, was $3.97 million at the end of last year, according to appraiser Miller Samuel. So, and Brookridge Douglas Elliman. The idea is, though, do you just want to, first of all, are you just thinking, I don't want to live here anymore, the threat of fire, so let me sell my land and let me go somewhere else? But that is certainly potentially a loss after the build back. But you don't know, right?
You don't know because would the person who sold this still get insurance money to rebuild or get insurance money for the loss of the structure?
Right, right.
And what's the value of that insurance beyond the land value?
But if it last sold in 2005 for $1.54 million, even if it goes for $1 million, right? They're already taking
they're already taking a loss there. But if that doesn't include the insurance payout that they would ostensibly get if they were insured.
Yeah, that's true.
And then that would be for the rebuild. Make sense?
Yeah.
But I don't know what the details of that are.
Yeah, here's one. Property owners in the Eaton fire area have also listed burned out sites. A sale is pending on a 9,100 square foot lot in Altadena that was listed in late January for $449,000. The property last sold in 2023 for $965,000. Yeah, we're going to have to get to John Gittleson. This is interesting because I would love to kind of hear a little bit more about what he's seeing, what it means, who's buying, who's picking up the properties. All right, do not go anywhere. We're heading over to our TV colleagues. We're going to count you down to the close on this Monday. The closing bell starting right now.
The thing I just put in the chat,
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, we're about 2 minutes away from the end of the trading day. Alex Steele and Scarlett Fu, we're going to take you through the Closing Bell in a global simulcast. We're now joined by Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And guys, Elon Musk is making it exciting to the end.
Oh my God, it's pretty wild, right? We know the feud that he's had, certainly with Sam Altman over OpenAI, but looking to see if whether or not, you know, he could ultimately, with a group, this is our most read story on the Bloomberg in the past hour, you know, making a $97.4 billion bid for control of OpenAI. This is a Wall Street Journal story, but man, it makes it interesting.
I do wonder, what does this mean about a company like XAI? This is his OpenAI competitor, XAI. What does it say about XAI if he wants OpenAI as well?
That he just wants more?
Yeah, as Alex reminded us, XAI is smaller than OpenAI too.
If XAI were better, would he still want OpenAI?
Maybe. I mean, the other question here is OpenAI even for sale, or does that not matter?
I asked that question rhetorically earlier, too.
I don't think it matters.
I mean, but to be fair, isn't everything for sale but for the right price? And that's what any CEO is probably going to tell you.
Either, but
we don't know. Maybe the right price. I'm just saying. I guess it just also raises the question, too, on the funding for it. Did you guys see that? Like a list of investment firms that would be engaged with this.
Not to mention banks that, you know, have made back a lot of their money on the debt that they took on when Elon Musk bought Twitter.
How does Microsoft feel about the investment, too, right?
Yeah.
Made in the company. I don't know. There's a lot of moving parts.
There's a lot of moving parts.
A lot of unanswerable questions.
Exactly.
Yeah.
All right, there is the closing bell on this Monday. The S&P is ending up by about 0.7%, almost retracing all those losses, guys, from that deep-seek Monday, almost by about 5 points. The NASDAQ outperforming, up by a full 1 percentage point. The Dow Jones, guys, up by about 0.4%, but the Russell participating as well. But this is still a tech-led rally.
Yeah, it certainly is. I'm going to go, though, to the S&P 500, kind of almost an even split. 287 names, Scarlett, to the upside, 214 to the downside.
All right, let's take a look at the IMAP, and you'll see a lot of green on that screen there. There are two groups that did decline. Financials, which, of course, have done very well this year, seen as beneficiaries of tariffs, of deregulation, of light touch regulatory regime as well. They're down 0.8%. The other slice of red is healthcare, marginally lower, but your best performers are energy, up by 2.2%, tech gaining 1.5%, reducing some of their losses for this year, and utilities also up by more than 1%.
Man, a lot of green on that screen and that IMAP. Let's get to some of the individual gainers. You mentioned big tech and meta platforms. Actually, I won't start there. Well, I am going to start there because it plays off of what you just said, Scarlett. But it was up about 0.4%. I bring it up because 16 days of gains, outpacing the longest winning streak by Tesla. We also did see it hit a record in today's session. Stocks up some 17% in those 16 days. So it's just been on quite a tear, quite a run in terms of Meta. So forgive me, I'm going out of order. Let me go back to Cleveland Cliffs.
There you go.
Let me bring it up. Obviously, the mining space, big outperformance in today's session coming off of tariffs. Steel and aluminum stocks surging on the president's plan to impose 25% tariffs on foreign imports in the sector. I just pulled out one, Cleveland Cliffs, which finished just off its highs of the session, but still almost an 18% gain. Nucor, Alcoa, U.S. Steel, all of them. The thinking is that these tariffs would make it harder for overseas companies to ultimately sell their lower-priced steel or aluminum here in the United States, so supporting some of those domestic producers. But it's pretty tough. Maybe some of this could happen on the steel side. Aluminum, though, you know, the U.S. imports, almost all of its aluminum, so it's a little tricky. But anyway, we did see some movement there. BP, I know you guys were, I think, talking about it on air, finishing the day with a gain of about 6.7%, surging the most since 2020. One of the most aggressive activist investors, Elliott Investment Management, building a stake in the company, looking to end years of underperformance by pushing for some significant change. So that was quite a mover. And then going back to Meta, not a huge movement, but it's still up 16 days in a row, as I mentioned, up about 17%. So just kind of interesting to see the trend, the upward trend, big time in that one.
Okay, you got the ones that are moving higher, Carol. I got the ones that are moving lower. Looking at shares of Tesla, down for a fourth day in a row, 3% today. Shares down more than 26% from those highs back in December, though still up by about 45% since the election. Last week's Tesla week was the worst week for Tesla since October. It was weighed down with bad sales from around the world: Germany, France, UK, China, and then also some bad news from California as well. On Semiconductor Corp, down 8.2% today. The company gave adjusted earnings per share for the first quarter. The guidance came in much weaker than expected. It wasn't just adjusted EPS, though. It also missed on revenue, adjusted gross margin, and operating expenses. We saw price targets cut at Jefferies and KeyBank in the wake of that report. And finally, shares of Hain Celestial down 10.6% today. It's the company behind Earth's Best, Terra, Garden of Eden. The shares tumbling to the lowest level since 1997. Adjusted earnings per share coming out for the second quarter that missed the average analyst estimate. They cut their guidance for profits and organic sales. They're exploring strategic options for its personal care category. The CEO, Wendy Davidson, said, quote, "Sales growth in the quarter was hindered by poor in-store performance in snacks, driven by marketing promotion effectiveness and supply chain challenges," and they've already taken steps to address those challenges.
All right, the bond market, guys, a little mixed here. We saw some buying across the whole curve, really, but then we got a little distinguished as we went down over the last couple hours. A little bit of selling in the long end, buying in the front end, but the real story, over the next 3 days, we get $125 billion worth of supply. Tomorrow is $58 billion worth of 3 years, so always interested to watch what that takedown is and who's buying and how much they're willing to pay for it.
All right. Good stuff. That's a wrap of the markets on this Monday. Our cross-platform on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Guys, we'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovec live in our Bloomberg Interactive Brokers studio. Just got to go back to what has certainly been a bit of an eye-dropping, or jaw-dropping, I should say, story. It's coming from the Wall Street Journal. It's your most read story on the Bloomberg in the past 60 minutes. And a consortium of investors led by Elon Musk is offering $97.4 billion to buy the nonprofit that controls OpenAI, upping the stakes in his battle with Sam Altman over the company behind ChatGPT. I am just pointing out, I am reading from the Journal. We've talked about the two, Elon and Sam, kind of, not getting along about what should be the mission of OpenAI. And this is kind of interesting. It's an unsolicited offer. And, Sam Altman has had some plans, right, Tim, in terms of where he sees OpenAI going. And that includes converting it to a for-profit company and doing a big spend on AI infrastructure.
Scarlett and Alex talking a little bit about the big names and the companies behind this deal. So there is Musk. There's also, according to this Wall Street Journal report, Musk's own AI company, xAI, which, according to the Journal's report, would merge with OpenAI after this deal. Other backers on this include Valor Equity Partners, Barron Capital, Atreides Management, Vi Capital, and 8VC. 8VC is a VC firm led by Joe Lonsdale, who's the Palantir co-founder. And then you've got a name from Hollywood, Ari Emanuel, CEO of Endeavor, backing the offer through his investment fund. Again, reading from the Journal's report.
Yeah, so many questions in this report from the Wall Street Journal. One of the thorniest questions they point out in the conversion has been how the nonprofit will be valued. Musk's bid sets a high bar, may mean that he or whoever runs the nonprofit would end up with a large and possibly controlling stake in the new OpenAI. And so it says this bid is also being backed by Musk's own artificial intelligence company, xAI, which could merge with OpenAI following a deal. Again, we are reporting what the Journal is laying out, and you just went through kind of the round of investors that are backing him. So, yeah. We'll have to. This is one of those TBD.
We're going to keep an eye on this.
To be continued.
We'll keep an eye on this. We'll bring you any updates as we continue to get them.
All right.
Hey, Carol, before I do anything when it comes to ETFs, I get in touch with the folks at Bloomberg Intelligence because they know everything when it comes to ETFs. So shout out to BI ETF analyst James Seyfert, who pointed me to a recent note that he wrote that says ETFs are on track to overtake mutual fund peers in assets within a decade. And then there's the question of passive versus active, because when we talk about ETFs, we talk about oftentimes index funds. Passive ETFs dominate. Here are some numbers from Bloomberg Intelligence. $595 billion in 2024, but don't shrug off those active equity ETFs because they're booming too. Inflows exceeding $35 billion each quarter in 2024.
Which makes me wonder, do we need to have mutual funds? I always wonder about this. Although people have said reason why you need mutual funds.
You see mutual funds moving to become ETFs.
Right? Increasingly. Yeah. All right, let's get into it with Eli Horton, Senior Portfolio Manager at TCW's Active ETF Investments. He joins us from Los Angeles. Eli, good to have you here. First of all, in terms of active versus passive, where do you see the new money flowing into, and where do you guys think about focusing more of your efforts going forward in terms of fund creation?
Well, it's nice to be here. Thanks for having me.
Hi.
Look, at TCW, we've really identified the ETF wrapper as very compelling from a tax perspective. We also are seeing a really incredible opportunity on the active investing side. I would highlight this as one of the best stock picking markets that I've certainly seen in my career. We're seeing significant levels of concentration, really the highest levels of concentration in about a century. We're also seeing meaningful levels of dispersion in stocks, significant volatility. That's really our best friend when it comes to being an active stock picker.
Okay, so in terms of active stock picking, how do you see that going into somebody's portfolio if their portfolio is dominated by index funds? Eric Balchunas at Bloomberg Intelligence loves to call it the hot sauce effect. It's like you have the boring S&P 500 ETF or the, VTI, Total Stock Market Index from Vanguard or something like that. And then maybe you throw in like an ARK fund for 3% of your portfolio or something. How do you think about it?
Look, you could look at the S&P 500 and look at the concentration at the top of that index. Over 35% is really in 10 companies. And so while many investors think they own a very diversified basket, there's a lot more concentration than folks think. A couple of strategies that we manage here at TCW, one, invest in the energy transformation, the other invest in the reshoring of supply chains and bringing manufacturing back to the U.S. These are actively managed 20 to 30 stock portfolios investing in multi-decade mega themes, and you wouldn't actually find those structural themes represented very highly in the S&P 500 at all. You probably have somewhere between 8 to 12% exposure. So I think that is extremely complementary to many investors, and it also provides that active stock picking, which, like I said earlier, I think this is one of the most favorable markets I've seen in my career for stock picking.
Yeah, interesting. All right, so thematics make a difference, right? And I am curious about the thematics that you think are going to be most appropriate in this environment. Or is it just everything? Is it just everything or not necessarily?
Well, I think you have to be very selective and avoid fads and look for, we'll call it mega themes or mega trends, themes that'll be multiple decades in duration. So I'll hit one, the energy transformation. So we have a strategy that we call Transformed Systems, the ticker's powered PWRD. And we're investing in the migration of the world's energy system from a fossil fuel system to renewable energy. We are probably 20 years into this process. And if you just look at where power and energy are sourced from, only about 15 to 20% is truly renewable, and the rest is hydrocarbon based. So even 20 years in, we're nowhere close to the end game. And the world's investing about $2 trillion per year to migrate towards this end state. That $2 trillion is growing every single year. It's largely non-discretionary, and it's creating tremendous opportunities, whether it's the power and electrical grid, transportation, commercial services, a variety of different businesses. Again, going back to my earlier comments, many of these companies are old economy companies and less represented in the broader markets. And this is a theme where you've got a nice tailwind at your back for decades. That's one of the examples I highlight.
Yeah, I'm looking at PWRD, as you said, the TCW Transformation Systems ETF. It's up about 32% in the past year, up about 8% so far year to date. And if I look at some of the holdings, it's GE, it's Airbus, it's Vistra, which we know has been a big, been rewarded by the AI spend in terms of the energy expectations, Union Pacific. So it's kind of so what's the theme there? It's just anybody that's impacted by the move towards renewables?
So the point I think we should try to drive home here is that investing in the energy transformation requires a much broader subset of businesses and value chains and systems than most think. It's not just energy. It's not just batteries, wind, solar. There's so much more that goes into play here. So you mentioned Vistra. Vistra is a generator of power. Nat gas, nuclear. Our grid needs to be expanded massively. We're short power. Vistra is enabling the transformation. You mentioned GE. Most folks wouldn't think of an aerospace engine company as being part of the energy transformation, but GE makes one of the premier engines that go on the planes we all fly around. It burns 20% less fuel. That's obviously great for the environment, but it is extremely valuable to their airline customers who are spending a third of their operating cost on fuel. So we've got a power producer, an aerospace engine supplier, a variety of other types of companies that are actually vital to transforming the systems or our energy system, if you will. It's much bigger than just traditional energy or renewable energy.
You've also got waste management services in there as well. We like talking trash here. We've talked to the folks at some of these huge companies, Republic Services, that are listed. What's the opportunity that you see?
We love talking trash too, and Republic has been one. It's been one of our large investments since inception of the strategy 3 years ago. Amongst other merits that Republic has that make it such a great business, it is actually taking its landfills, and inside these landfills, there's a bunch of biodegradable material that emits gases, primarily methane. Republic can capture and capture that gas, run some industrial processes on it, and out the other side comes renewable natural gas. So they're literally taking trash, turn it into natural gas that can then be sold into the market. Perfectly circular. The net IRRs on these projects are in excess of 50, 60%. So it's a very high value business. And no one ever thinks about that when you think about Republic's business, but it's actually very important for the energy transformation, very valuable to the stock. And so we have been proud owners of Republic for a few years now.
Can you just take me through as portfolio manager your process for adding to a stock, adding a stock, selling a stock, or removing a stock? Like, what goes into that?
Look, so at the end of the day, our investment process is one that we strive to be repeatable, teachable, proven through cycles. It's very fundamentally oriented, very bottoms-up driven, and we're looking for companies that are misunderstood or have secular growth opportunities that the market's not appreciating. And when we find a great business where we think there's an asymmetrical range of outcomes where reward really offsets risk by a large magnitude, you'll see us express conviction in the form of sizing. And so businesses like Republic or GE, where we are extremely optimistic about the multi-year prospects, we'll make them large investments in the portfolio. I believe as an investor, that type of concentration and sizing is how you beat the market through the cycle.
All right, we're going to leave it on that note. Listen, there's so much happening in the energy space, so really kind of cool to see your perspective and take on all of this. Eli, thank you. Eli Horton, Senior Portfolio Manager at TCW's Active ETF Investments, joining us from Los Angeles. All right, folks, you know we have read about the most read, or what is the most read story on the Bloomberg, coming from the Wall Street Journal about a consortium of investors led by Elon Musk offering $97.4 billion to buy the nonprofit that controls OpenAI. Well, Sam Altman, of course, who is one of the co-founders of the company, runs the company, he has made some comments.
He has. He says, thanks, but no thanks. He says specifically exactly on X, the account, that he has on the Elon Musk-owned social network, quote, no thank you, but we will buy Twitter for $9.74 billion if you want.
Yeah, sounds like two people get along really well. I mean, we have talked.
And we're watching this happen in public.
In real time. We've talked about the conflict, or what seems to be two individuals not getting along, Elon Musk and Sam Altman. Again, both co-founders of OpenAI, both have had ultimately it seems like some different visions about what should be the mission of OpenAI in terms of whether you open it up, making it more of a business versus more of an altruistic institution.
Remember, Elon bought Twitter for $44 billion back in October of 2022.
Yeah, but valuations have been
a
little bit
Well,
different.
It's a private company, so, we see what Fidelity has done to it, and it's mark to market, but...
Yeah, exactly. We should point out that that unsolicited bid, was submitted to OpenAI's board Monday. That we did get from the Journal, citing Musk's attorney, Mark Toberoff. And again, Altman saying, no, thank you, but we will buy Twitter for $9.74 billion. See how he did that? Just moved the decimal point.
All right, what's Elon going to say?
Pretty clever. I don't know. Stay tuned, guys. There's probably more to come. This is Bloomberg.
Yeah, it's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. An offer and a refusal. OpenAI CEO Sam Altman is rebuffing a reported bid by a group of investors led by Elon Musk to buy the nonprofit that controls ChatGPT creator OpenAI. The unsolicited bid of $97.4 billion was submitted to OpenAI's board today, that according to the Wall Street Journal. In the meantime, Altman has posted on Musk's X social media platform, no thank you, but we will buy Twitter for $9.74 billion if you want. Stocks kicked off the week with gains today. The Dow, the S&P, and NASDAQ all higher. Today we had the S&P 500 index advancing 40 points, up 0.7%. The Dow up 167, up 0.4%. NASDAQ up 190, up by 1%. 10-year 4.49%. The 2-year 4.27%. Gold at $29.06 an ounce. That is a record, up 1.6%. West Texas Intermediate crude up 2.1%. Aluminum and steel companies gained as President Trump planned to impose 25% tariffs on all imports of the metals into the country. Among some of those steel-making names today, U.S. Steel up almost 5%, Nucor up by 5.6%, Cleveland Cliffs today up by 17.9%. Recapping, S&P higher by 40, up 0.7. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, more on that story that you just heard from Charlie. OpenAI CEO Sam Altman rebuffing a reported bid by a group of investors led by Elon Musk to buy the nonprofit that controls OpenAI, the ChatGPT creator. For more, we go to Bloomberg News technology reporter Jackie Davalos, who joins us from San Francisco. Jackie, good to see you this afternoon. Why would Elon Musk want OpenAI again? Why would he want it back?
There's some long-standing beef here, Tim. As you remember, the company was founded in 2015, and alongside Sam Altman, Musk ran the company. They had this shared vision initially to have it be this nonprofit. They were going to make AI for the good for humanity. In 2019, things went sour. Musk formally left, and under Altman's leadership, we saw OpenAI trying to become more creative with how they were structuring the company to be able to bring in more outside capital through this for-profit vehicle. Now, why does Elon Musk want OpenAI today? Well, this bid is exactly for the nonprofit structure that controls the for-profit company, the one that's raising billions of dollars in capital. There's a couple of reasons that he might want it. He's been talking about the importance of AI safety, and he's not totally on board with the direction that Altman has taken the company. In his view, they have lost that initial mission to make AI for the good of all, and perhaps it's become more for commercial ends. But we have to remember here, Elon Musk has his own AI company too. That's where this bid is really emanating from.
So I want to understand if, Jackie, if they keep it, if he buys it and this group and keep it a nonprofit, what might that do for the U.S., either in a good thing or a bad thing in terms of the race for AI, especially now that we're, just a couple of weeks off of the DeepSeek news from China, which seemed to have a very cost-competitive model, AI model, much cheaper. But I mean, we're still trying to validate or confirm that what they said they did. But nonetheless, if this happened and Elon and his group did this, would it impact the AI race in some way here in the United States?
It potentially could. And the reason for that is, OpenAI has been able to expand and roll out more offerings because of the capital it has attracted. And a large reason for that capital is because investors are banking on this being able to be monetized, that they're going to make a bang for their buck, this return on investment. And you can't really do that in the same way when it's simply a nonprofit, which is why OpenAI had to get creative with this structure to begin with. So what does it mean for the whole, the bigger picture, the AI race here? It could potentially hamstring OpenAI's ability to grow, to expand into new offerings, because at the end of the day, those can be monetized. How would investors still keep pouring something in or capital into a company that doesn't give them something back? That's kind of the big difference. And I'm not sure how this works out with Trump's relationship with Elon Musk, especially given the whole Stargate tie-up just a couple of weeks ago. That's another complicating factor in this potential deal.
Jackie, how is XAI different from OpenAI's ChatGPT. Like, do they hold a candle to one another, or is ChatGPT that far ahead of XAI and the other competitors?
OpenAI has quite a few years on XAI, but at their core, they're looking to do similar things. They both have a chatbot. They are both looking to optimize language models. So, you can use it for everyday tasks. And, what OpenAI's advantage really is just kind of the wide breadth of offerings it has. It has an agent. It's, exploring how to optimize that agent even further so you don't have to do so much clicking around your desktop. I think XAI has the potential to get there. I mean, certainly you've seen it valued also at billions of dollars. So it just has a couple of years to go. But when we stop to think about what the potential advantage to Elon Musk and his competitive gain here from having OpenAI under its umbrella, it would be, I mean, it's hard to even describe because OpenAI is the player. And to be, putting up a bid that is so far below what it just raised at in the fall, $157 billion. It's now looking to raise at $300 billion. It's a complete lowball.
Yeah, I'd love to know what Microsoft thinks about all of this, right, in their investment. Hey, just one last quick question. Just got about 30 seconds. So what's the story that you want to chase on this coming off this news? What's the top question here?
What will the board say? Will the board entertain this offer? Remember, we have some big players on OpenAI's board: Brett Taylor, Adam D'Angelo, Fiji Simo, CEO of Instacart. They have to review this offer. Although we did get a response back from Sam Altman on Twitter. He said, no thanks, we're good. We'll see if that changes once the board has had a chance to review this offer in full.
Just kind of wild. All right, good stuff. And it's certainly a story that I know already we're going to be talking about tomorrow. Bloomberg News technology reporter Jackie Davalos joining us from San Francisco.
Well, speaking of AI and OpenAI had a commercial at last night's Super Bowl. And by the way, the cost of those ads risen to a record of over $8 million. Adweek pointed out that Dunkin', Pfizer, T-Mobile, Nike, Jeep, and others are among the companies that spent the most, opting for some 60 and 90-second spots.
Dunkin' spot was long.
The boy band one?
No, the one where, what's his name, was in the vat of
I didn't see that
coffee
one.
beans.
Okay.
But
well,
with...
yeah, I don't know.
Yeah.
I have no idea what you're talking about. But
with Ben Affleck.
If you know, you know, I guess. Doug Zarkin is Chief Brand
occasionally you got to
Officer.
run to the bathroom during the Super Bowl. I'm just going to
true.
say, you can't watch all the commercials.
Doug Zarkin is Chief Brand Officer at Modern Performance and Recovery Brands. It's a holding company that counts the Good Feet store, ING Source, Stretched, and Compression Health among its brands. Doug's also held executive roles in marketing at Luxottica, Avon, Victoria's Secret, and more. He's also the author of Moving Your Brand Out of the Friend Zone. He joins us from New York. Doug, is that money well spent? Carol doesn't even remember the Dunkin' ad.
I do remember. So I can't remember the actor who was also in it. Was it Jeremy Strong? Was it Jeremy Strong in the vat?
Jeremy Strong from Succession, yeah. $8 million for a 30-second spot is actually the most cost-efficient media buy on the planet because it reaches about 125 million people. The challenge is you got to go big or go home. You have to be either really sentimental and tear-jerky or really over-the-top funny, because consumers, and I talk about this in my book, make emotional decisions before they make rational choices. And the commercials that we're talking about today were either very emotional on one side or the other side of the aisle.
That's so true.
When did it like it become socially acceptable for celebrities to do whatever to do anything for money? Because I was part of the generation, Carol, and I think you probably remember this, like the whole concept of selling out was like a thing.
Oh yeah.
That doesn't exist anymore. When did that happen?
No, and brands like being, I feel like, affiliated with celebrities in a big way.
You know, it used to be a dirty little secret. They would go overseas and they would shoot a commercial. You know, these Oscar winners would maintain their creative integrity. Well, creative integrity started to go out the window when the paychecks started to be 7 and 8 figures. When you're seeing George Clooney do an Nespresso commercial, you scratch your head, you're going, oh, the money must be really good. And I would say this. Because you can doesn't mean you should. And I mean that specifically with celebrities. If it's not adding real value to your brand message, you're just sticking them in and you're paying a huge out-of-pocket cost for what may not add to the story or the memorability of your ad.
Yeah, I have to say I do stop when there's a celebrity. You know what's interesting? I think of kind of like all the fashion magazines when they were still, you know, I mean, some of them are still in print, a lot of them, but like a Vogue or something, and it became no longer that models, like the supermodel era of how many years ago, but it was celebrities that are on. In Style magazine, it was always a celebrity on the cover. It really wasn't models anymore, and it just speaks to the power of the celebrity. I don't know. I feel like the last couple of Super Bowls, the commercials were really, really boring. I thought they were more interesting last night.
You know, there were some definite big winners. You know, I think the NFL came out huge with their girls play flag football, really strong emotional spot. The Lay's Little Farmer spot where the girl plants the potato and raises the potato to be a potato chip.
Super sweet.
Super sweet.
That was a cute
But then there were some that kind of jumped the shark. You know, Bud Light with Shane Gillis and Post Malone. That's an example of because you could, I don't know if you should. You know, what did they add to the story? And if there's another commercial with Peyton Manning or Tom Brady in it, I honestly may just shoot myself. It is so over the top. But there were some definite big winners. I think everybody loved the Mission Impossible trailer. That was a big, big win. The Stella Artois ad with David Beckham and Matt Damon, really, really funny. Oh, it was great. The only thing is I think we're over the joke of the Matt and Ben relationship. Duncan played into it in that Duncan ad you were talking about. Stella Artois played into it. There's a lot more ways to skin a cat than going to that old tried true gag of Matt and Ben. But there were some real big winners last night and
Doug,
some big losers.
30 seconds left. If it's such a great ROI for $8 million, why are they only charging $8 million?
Because it's $8 million. It's still a pretty darn big number. Because it is a go big or go home. You risk it. It's a highly visible, but it is also a highly critical opportunity. People are going to lambast you if it's bad, and they're going to tell you it's really good if it's really good. You win big or you lose big on the Super Bowl.
What I also thought was interesting, and I know we're running out of time, but something like the Nike spot and women in sports, like we are wondering whether corporations are rolling back on diversity and inclusion and efforts and being very careful with the new administration. Some would say that they are, but it was interesting to see something like that Nike spot, very, you know, behind women and behind women in sports. Just quickly.
It's a great opportunity for companies to show their values to the consumers all over the world.
All right, good stuff. Hey, this was fun. Doug, thank you so much. Doug Zarkin, he's Chief Brand Officer at Modern Performance and Recovery Brands, joining us in New York City. You are listening and watching Bloomberg Business Week. Carol Massar, Tim Stenbeck.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all advancing today. Stocks kicked off the week with gains, rebounding after a slide driven by concerns over inflation and U.S. tariff threats. The dollar strengthened. Gold today climbed to a record. Right to the numbers, S&P up 40 points, ending the day at 6,066, up by about 0.7%. The Dow up 167, a gain of 0.4%. NASDAQ up 190, a gain of 1%. 10-year 4.49%, the 2-year 4.27%. Gold at $29.07 the ounce, up 1.6%. West Texas Intermediate crude up 0.7% today. WTI actually up 2.1%, 72.49 a barrel on WTI. An offer under refusal in the past hour. OpenAI CEO Sam Altman is rebuffing a reported bid by a group of investors led by Elon Musk to buy the nonprofit that controls ChatGPT creator OpenAI. According to the Wall Street Journal, the unsolicited bid of $97.4 billion was submitted to OpenAI's board today. In the meantime, Altman posted on Musk's X social media platform, "No thank you, but we want to buy Twitter for $9.74 billion if you want," shifting a decimal point. Recapping, S&P up 40, a gain of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thanks so much for that update. Do appreciate it. From Algeria to the Seychelles to the Upper East Side and everything in between, our Bloomberg Pursuits team has got you covered. Check out the magazine's Where to Go in 2025 interactive feature. It gives you personalized month-by-month estimates for hotel and flight costs alongside each recommendation.
It's super fun to play with. We did it, and we've done a deep dive into it. So if you missed it, you can just check out our podcast feed because it's got some pretty cool stuff.
Well, for more on travel this year, we're joined by Haley Berg, lead economist at the travel app Hopper. She joins us from Boston. They have done some serious number crunching over at Hopper this year. Haley, what can you tell us about the American consumer in 2025 and how much we're going to spend on travel?
Well, the answer is most consumers are going to be spending a lot on travel. And if they aren't spending the same as they did last year, they're expanding it. We found that more than half of Americans plan to spend at least the same amount as they did last year on travel, hotels, airfare activities. And about 23%, so almost 1 in 4, are going to spend even more. And that's true across income ranges, across ages of those travelers. Expansion is in the air.
Who's traveling?
Young people, old people, everyone is hitting the skies and staying. We are seeing the greatest growth from younger travelers, Gen Z who are building wealth, millennials who are enjoying some wealth. But we are also seeing that retiree ages, boomers, they're spending more on premium. They're taking those end of the career trips. So really expenditures coming from everywhere.
Gotta say, one of our colleagues who will remain nameless just took an amazing trip that took 18 hours to get there. Incredible remote resort. We're not going to say who because we keep secrets around here.
Well, he does talk about it on a new podcast.
Oh, he does.
A new edition of his Hot Pursuit podcast.
All right.
So I just want to give a little.
Matt Miller, you're outed. I'm just going to tell you.
He's going to talk about it on the podcast. So apparently.
But it's pretty remarkable and looks like a really cool thing. No kids came along, just he and his wife. So sorry, Matt, we just laid it out for everybody. It is interesting that that's continuing. Are there certain parts of the world where people are going increasingly? Like we've talked about, Japan has been a pretty hot spot, right? Everybody went to Italy. Was it last summer? The summer before. Where are people going?
Well, Matt's not alone. Ends of the earth destinations are actually one of the fastest growing segments. Patagonia, Greenland, destinations that take a very long time to get to and are difficult to traverse are definitely growing in popularity. But also some more mainstream destinations. You know, at this time of year, it's a lot of Caribbean destinations. This summer, we are expecting to see an uptick in demand for Bangkok after the White Lotus premieres later this month. We've seen in the past couple of years, as each season of that show releases, it's followed by a huge surge in demand for where they filmed. So we are seeing ends of the earth, but also some more of those mainstream destinations. In Japan, nothing is stopping the demand to Japan. It remains the #1 international destination seeing growth.
That's pretty amazing, because I was going to say, Carol did mention that you've told us about Japan, but it was last time you were on with us, you said Japan.
Yeah.
The time before that you were on with us, you said Japan. Haley, what's the next?
It's Japan, all the way.
What's the next Japan?
It could be Bangkok. You know, we haven't had one of these set jetting destinations. That's what we call them when media drives where people travel. We haven't had one in a few years. We saw Croatia. We saw Iceland with the Game of Thrones series. We've seen Yellowstone with that series driving to Banff, Montana. So it might be Thailand that's up next.
Very cool. You say that like all different ages, but are people looking, I mean, for like value? Are there deals? Are they booking in advance to get the best prices? What else can you tell us about the state of the consumer? They're obviously, as you're saying, are traveling, but I am curious if increasingly we're seeing people looking for a deal.
Absolutely. We track what we call deal-seeking behavior. When people are booking, how often they're checking the price before they book. And what's really interesting is that about 2/3 of travelers are checking multiple websites or apps, at least 3 or more, before they actually make their travel bookings. And that shows us that there is price sensitivity. But on the flip side, we've heard from the airlines, we've heard from the hotels that this demand for premium is just not exhausted yet. It's still growing. And I am seeing that as well. We have these price-sensitive customers who are checking multiple sites, really doing their homework, but they're also willing to pay extra for things like flexibility, disruption protection, a room with a view, or a hotel with a nice restaurant. So it's a little bit of a balancing act. The youngest travelers are definitely the most price sensitive, but there is a balance between how price sensitive Americans are and how much they're just trying to kind of hack that budget to get the most out of it.
And yet, according to your research, the folks at the lower end of the income spectrum are expected to spend more on travel this year. What's the explanation for that?
About 22% of the households earning the least in the U.S. are actually expanding their travel expenditure next year. And I think a big part of that is getting more out of their existing or a slightly bigger budget. But also it's this shift that travel and experiences are what households want to spend on once they've paid for their needs. And that's why they're continuing to expand this travel budget.
Hey, where do cruises come into this? We caught up with the CEO of Royal Caribbean, and they reported a full year profit forecast that blew away past street, I should say, expectations. Cruise demand, they talked about continuing to ramp up. This was just at the end of January, and then they're moving now into the river cruises, which we've seen certainly other lines, whether it's Viking, Carnival's been doing it too. Carnival's been upbeat as well. We've talked with the CEO there. How does cruising fit into this, and what are you seeing in terms of demand?
Cruising is definitely an area of growth, especially as you say, those river cruises, which offer a more intimate, a smaller, but more of a unique experience. We know those types of experiences are hugely popular. They're growing in demand, especially among younger travelers. Historically, some of those river cruises have been more focused on an older generation of traveler, but that is shifting. I think a lot of travelers see cruises as a great all-inclusive. They know the price tag for everything, food, where they're going, the activities that they're going to be able to do. So cruises are actually a way to really manage that travel budget. And I'm not at all surprised that we're still seeing surging demand for trips on cruises, whether they be short river cruises or some of those bigger Caribbean ones.
All right, got it. Hey, Haley, we're going to leave it on that note. Haley, thank you so much. Haley Berg, lead economist over at Hopper, joining us on this Monday from Boston.
Where are you going?
Maybe some beach time. I don't know about anything else.
I know, Sam.
Not complaining. It's just...
It's a little early to be planning the beach, Carol.
It's never too early.
Okay.
To learn the age. Hey, listen, coming up, we're going to get back to what is the most read story on the Bloomberg. We talked about the Wall Street Journal's story in Elon and a consortium making a $97.4 billion bid for control of OpenAI. Sam Altman says, thanks, Elon. No thanks, but I'm ready to make a bid for your company. Anyway, we're going to get into it. We're going to talk with our own Max Chafkin, who follows all things Elon and the tech space. He's coming your way in just a moment right here on Business Week.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week, as we've been mentioning pretty much constantly over the last hour. OpenAI CEO Sam Altman has rebuffed a reported bid by a group of investors led by Elon Musk to buy the nonprofit that controls the ChatGPT creator. That is OpenAI. With us to talk all about it is Max Chafkin, a Bloomberg Business Week columnist, also co-host of the Elon Inc. podcast. He's also the author of the contrarian Peter Thiel in Silicon Valley's Pursuit of Power. Why would Elon want OpenAI again, Max?
Well, hard. I have to say this is taking me by surprise to some extent. But he's wanted OpenAI for some time. You know, if you look at the lawsuit that he is kind of engaged in with Sam Altman and some of the back and forth with Sam Altman, they were co-founders of this company back when it was a nonprofit. And Musk at various times has attempted to essentially take it over before. And you could see this lawsuit that he filed as an effort to prevent sort of Sam Altman from doing what he wants, from taking the company further away from Elon Musk. So in a way, this is like just the latest twist in that thing, Musk also has, of course, a competitive AI startup, XAI, which has, very quickly actually developed a product that is, it's not quite at parity with ChatGPT, but it's a pretty good product, Grok, which anyone who's using Twitter knows about. So you could see this as an effort for a guy with essentially unlimited resources, obviously great access to the regulatory establishment. Normally we'd wonder if this deal would pass regulatory scrutiny. I think it's fair to say that he'd have the inside lane given his relationship with Trump. So it seems like he's trying to take advantage of those two things. On the other hand, this could just be a troll, an attempt to mess with Sam Altman. Elon Musk has done a lot of that over the last couple of months.
Well, that's what the point you made before that, though, about, perhaps Elon Musk feels emboldened because he is a part of the government right now and certainly friendly with the current president, that he would make this offer. If he wasn't in this position, do you think he would still be, perhaps if it was the other thing, messing with Sam Altman, that he would have still done this? Or is it maybe tied to his position right now in the government?
Well, I mean, Elon Musk, as anybody who's followed him for a long time knows, he loves a good troll, right? He has, and part of what makes it difficult to cover him when he makes an offer like this is you can never tell if he's kidding or not, right? He has jokingly offered to buy Coca-Cola, for instance. He jokingly attempted to buy Twitter and then, in fact, actually bought Twitter. So there is this kind of line with Musk where it's always hard to figure out like where the troll stops and reality begins. I would say, if you look at his lawsuit against OpenAI, he says that OpenAI and Microsoft, have an illegal monopoly, that this merits antitrust scrutiny. So it would be hard to imagine, again, him making this offer and thinking it would pass FTC scrutiny, given that he's already said this company is too big, that there's already been too much consolidation.
Max, but is there some credibility, the list that we've got of folks that are part of this bid, Baron Capital, Vi Capital, a venture firm led by Palantir co-founder Joe Lonsdale, Ari Emanuel, through his investment fund. Is there some level of credibility because of that kind of long laundry list of people who are said to be part of that group, or not necessarily?
I think, yeah. I mean, I think what we learned with the Twitter acquisition, which, by the time it closed, it was very clear that Elon Musk had wildly overpaid, and yet there were lots of investors out there who were eager to do business with him. Here, you're going to have the same kind of list, and many of these people are close to Elon Musk, have done business with him before, trust him. And on top of that, we are talking about like the hottest startup in the world right now. And although 90 billion plus sounds like a lot of money, that's actually less than the number that's been sort of bandied about as far as what the valuation that OpenAI was looking at as it's raising this private financing round. Like, there have been reports of 150 billion. So it's not. So this is conceivably a fair value for this startup. You imagine that Sam Altman would want more if he were going to sell it. So, but you can totally see why investors would go for it. This is a hot company, and Elon Musk, as you're saying, is in an interesting position to run it as somebody who has all this influence. Now, of course, I'm sure there are people, investors in Tesla, probably even some like SpaceX employees who are like, oh my God, are we really doing this again? Do we really want to be further distracted? Musk has basically spent the last few months spending all his time with Trump. It's hard to imagine how he would have even more time to run another company. But this is what he does.
You mentioned the valuation. I'm even seeing a report, a Bloomberg redhead from late January 30th, that OpenAI is in talks to raise up to $40 billion at a $340 billion valuation. Why would an offer of less than $100 billion or such a lower number than a talked about valuation even be entertained by OpenAI?
Yeah, I mean, I think they're going to look at this as a lowball offer. The question is, do they negotiate? And is Musk making this offer in good faith, right? Like, is it the beginning of a negotiation that could get them to a place that they might be comfortable? Or is it just a troll? Sam Altman's response, he offered to buy Twitter for the same number. He just moved the decimal place.